we go. Just for the newly attendant, the non-farm payroll is the total. It reports monthly the total number of jobs added to or subtracted from the U.S. economy over the last month, net of farm workers. It's important because it's an indicator of health of the world's largest economy. It's the most widely followed event on the monthly economic calendar. If the results are approximately equal to or greater than the expectation, meaning better than the expectation, the U.S. dollar likely gains strength. And if it's less than expectation, meaning it's a lot worse, U.S. dollar likely weakens. Now, I hasten to point out it's all about the expectation. It's not about the actual number, which we know is going to be historically disastrous. Yes, that's right. We're expecting 22 million, that's 22 million unemployed people this month, when we were running previously a 3.5% unemployment rate. We're probably going to see something like 15% unemployment. The number is expected to be as high as it's been since the end of the Second World War in the United States. How can we be exploited? Well, by waiting to see the true market reaction to the outcome, not the knee-jerk reaction. One trades along with a trend that can stay in train for a few minutes to several days or more. One could trade 6 currency pairs during the event. Let's look at a potential setup of the platform. Okay. All right, we can start. This is good enough. Aussie dollar, euro. Look, I'm calling to your attention the pairs already pre-set up on the platform that I recommend you indeed pre-set up, and not only that, but in a particular order: Aussie dollar, euro dollar, pound dollar, dollar yen, dollar Swiss dollar, CAD. Note the dollars on the right versus the dollars on the left. And I'll get to why that is in just a moment, but this is how you should set your screens up. You set your trading platform up so that when the report comes out and the dollar gets strong or gets weak, goes one way or the other, where the pairs have the dollars on the right-hand side, you would buy them, and where the dollar is on the left-hand side, you would sell them, because it's going to take less. Remember, the scenario is the dollar weakens, so it's going to take less yen to buy the same $1, so that rate will go down. Hence, you sell that pair and you buy this pair because that's likely to go up. Is that clear to everyone? Does anybody have any questions on that subject? All right, then I'm going to continue. I'll just continue as long as I don't see any questions. I'm just going to roll through this. Now, this is really what I wanted to call your attention to. This is the setup for the report. All right. The trades. In the event that the outcome is positive. Oh, and let's keep to the theory first, and then we'll excuse me one moment, ladies and gentlemen. Then we'll go to the actual practice after that. The theory is, again, in the event of a positive outcome, and it doesn't mean absolutely, it just means better than expectations. So in this case, if we're getting less than 22 million, it's even crazy to even say these numbers, then that will be considered a positive outcome. Because, in other words, that's why I hesitated earlier about explaining, whether it's absolutely or negatively or positively. In the case of a negative number, a smaller negative number is better, right? So that would strengthen the U.S. dollar, and so that you would require. Remember, in all of these currencies pairs, or in any asset pair, it's always unit per unit. So it could be barrels of oil per U.S. dollar, or number of U.S. dollars per Aussie dollar. And so if the dollar is on the right-hand side and it weakens, it means it's going to take more of those to buy the Aussie dollar. So if it comes out negative, you're going to buy these, buy them up. And if it comes out positive, in the sense that the dollar strengthens, it's going to take less dollars to buy the number of Aussies, so that rate will go down and you sell that rate. That's why the order of your chart windows are thusly: Aussie dollar, euro dollar, pound, and because it's important. And let me make this clear, if it already isn't for the newcomers. Those of you who've traded these sessions are and should be well aware that they're very exciting. They're a lot of fun. They can be very profitable, and over, frankly, what can be a fairly short period of time. They can also be disastrous. And sometimes it just doesn't go the way it's supposed to go, the way you think it's going to go. And those are in normal times. We are not in normal times, and I'm going to get to that in a few minutes. But I just want to run through the basics of how we're going to trade this. And you always need to have this set up on your platform, regardless of what else is happening. You need to be fully aware of this setup. I would suggest that you copy it out and write it down on paper and hang it up and learn it, or at least download the recording from this and make sure you understand this, because this is essential. It's very, very easy. I interrupted myself, which I'm known to do now and then. It's very easy amidst the fun and the excitement and the money you can make and actually lose too. Let's not fool ourselves. To misexecute the trades. It goes one way, and all of a sudden you realize, how could I be losing money? Oh, I bought the wrong direction. And don't. It's not a point of pride, but it's no point of shame either. We've all made that mistake. It's not exactly even entirely a beginner's error. Happens to lots of people. You have to keep your head screwed on tightly, because there's a lot of excitement and there's a lot of pre-release energy on those charts, and it's very hard to resist to jump in because you think and then your legs get cut out from under you. So that's the basic setup. That's just an old. We made some money that day, and I clipped the P&L for that day. It was encouraging. Okay, I do have to mention there's risk involved here, ladies and gentlemen. Let's not kid ourselves. And I'll just take a couple of minutes to cover this, because it is important for all of us to always. Could you repeat what you said from the previous slide? Thanks, says Lesha. And gold, Miguel says. No, forget gold, Miguel. We don't talk about gold at all. Gold is irrelevant to this trade. No, it doesn't figure in. But I'm sorry, Lesha, I missed your comment when it came in. So could you refer to what slide are you talking about? This slide? Is this the one you refer to? Or this slide? Yes, the one before. This slide? Yes, that's the one. Okay, look, I'll be happy to do it. It's an important thing. We got to keep this straight. Just one moment, please. Get this question window so I can watch it at least. In the event, there are two possible outcomes to the report's release. Well, there's three actually. Positive, negative, and no trade whatsoever. And that happens now and then too. I really should write that in and update this slide, because that happens more and more the last couple of years. But in general, it's either going to come out better than expected or worse than expected. In other words, positive or negative. So having set up the 6 possible pairs with the dollars on the right on top and the dollars on the left on the bottom, I know that in case of a positive outcome, these are going to likely go down and these are going to likely go up. What time frame do I suggest? Carl asks. I don't suggest a time frame, Carl. I suggest a stop loss. Percentage of the position, or a rate of return, or some similar calculation in terms of asset allocation that suits you. But I'm not really here to discuss that. The time frame is irrelevant, though. Some of these trades can, if it's really booming, you can ride them till the end of the trading day today, and it's not uncommon, although it is in the last, say, year and a half or so. But for the last year and a half, it's not uncommon some of these trades to ride into the next week. There's so much momentum and enthusiasm given to the dollar, a lot taken away from the dollar, that you can make money through them. Through here, that little slide I showed you here. Where is it? Oh yes, this one here. I can't really see it myself. There's too much on my screen, but yeah, we did pretty well on some of these trades. And these went into went into the next day. I think that you can see the liquidation is the 2nd to the 5th. Yeah, so they go back a while. I mean, they run over the weekend, and so that includes the weekend carrying cost. But is this slide clear to you, Lesha? In the case of the negative income, the negative outcome, dollar weakens. That means it's going to cost more dollars to buy the 1 Aussie, buy, and vice versa, sell in the opposites. Okay. Great. All right, so let's move on. This is just some information from trading, investing.com. Oh yes, the risk aspect. There's plenty of risk here. They don't always work out. Remember, this is a human undertaking. These are people. Despite all the scientific, pseudoscientific, charts and graphs, this isn't science. Science is what you can build civilizations on and place the heavy foundations of strong buildings on that'll last for centuries. No, this looks like that. They pretend it looks like that, but this is human emotion. Okay, the herd mentality is what rules market traders' psychology, and therefore it's notoriously, as is human behavior writ large, fickle and sometimes unpredictable, particularly in times like we're living now. All right, now let's just take a quick jump over. I have to do a little bit of video jockeying here, ladies and gentlemen, so you'll please pardon me for one moment. Okay, I want to just give me one second. I want to switch over now to the yes, the non-farm payroll report as it is. Let's just take a quick look at this. This does definitely bear some attention. This, of course, is the calendar itself. So we see that in 15 minutes time, we have the non-farm payroll report. That's written in 22,000 thousands. That means 22 million lots. That's a negative number. Now, last month we had minus 700,000. If we go, let me just show you actually what a little bit of history on this chart looks like. This is last month. Longest that goes back. This goes back till 1970. This is the worst since 1970. We happen to know now from research that most of us have done over the past couple of weeks that this is the worst. This number that since it's been published, which has been the better part of, I don't know, a week or 10 days now, what the estimate was starting to gather around 21, 22 million. That's the worst since the end of World War II. It's worst since the second Eisenhower administration. It's bad, and well, the statistics are quite shocking, and what it's going to show, and this is really what I want to focus on, because this is the portion of what I want to say that's particularly germane to the weird times we're living in, and that is what's it likely going to do to the dollar in that case? Let's say it comes out, I don't know, let's say it comes out a little less than 22 million. If it comes out, by the way, worse than 22, let's say it comes out like 25 million, 27 million, which is just more of a kick in the groin here, the dollar is surely going to weaken. There'll be at least a shock value, because the market seems to have priced in, as they like to say on Bloomberg, the already the crappy number. So it's not really it's going to brush it off. It's not going to be a fill. I never understood that entire type of analysis. Like the market despite the fact that it's been aware of it for 10 days, wouldn't still be shocked by the actual printout of 22 million fellow American workers out of work in a month. It boggles my mind. So I think that if it's certainly worse than that, it's the dollar will weaken. The question is like this, really. It wouldn't take much for the dollar to get even stronger than it already is. There's no other game in town. Euroland is in a vortex racing down to zero interest and negative interest and things the average person can't even get their head around. The Bank of Japan, well, that's another whole economic fantasy land of its own. But the only real game in town, if you're a wealthy Northern Hemisphere investor, is to put your money in dollars. The U.S. stock market is remarkably brushing this off. But what I want to say is this: that if the number is close to, or even slightly worse, certainly way worse, but even slightly worse than that god awful 22 million, what it's going to do to the stock markets, and I have never. By the way, I'm 62 years old. I've been trading for 49 years already, since I was a young guy. And I have never in my life, and including my father's life, who grew up during the Depression, but he wasn't old enough to really experience the 29 and 32 crash. Though he knew his history, we all knew that and know the history. This is not going to turn around anytime soon. This is a long-term kick in the pants for the world economy. And these states that are freeing up and these countries that are loosening up are sitting ducks for the next wave. And as we know from the 1918 influenza outbreak, that the second wave is much deadlier than the first. And there's going to be a second wave with this kind of get back to work at any cost, full speed, damn the torpedoes, full speed ahead kind of nonsense. Well, that's just my editorializing, but it's not only me. If this number comes out anywhere slightly or substantially above 22, below, I should say, what am I talking about? Above 22 million. In other words, even more and more people are unemployed than they even expected. Well, certainly the dollar will weaken, but I hasten to add, I would not necessarily, and this goes back to Carl's question about the time frame. I don't know, these are not normal times. If you said, well, leave out the virus, but I just happened to say that they're going to lose 22 million, you'd run from the dollar, you'd sell it, it would be selling, it would have lost 25, 30% of its value, like an emerging market currency, like so many, like the Turkish lira, for example, or the Russian ruble, or the Brazilian real, or you name it, the emerging petro economy, emerging market currencies, in the toilet. But this is the U.S. dollar. And as bad as devastating, well, I wouldn't know if devastating is the right word. As bad as the damage is in the United States, you can be completely, positively, 100% sure that it's way worse in Britain, way worse in Italy, Spain for sure, Russia, God only knows when they'll recover from it, and the Chinese will never know because they've been lying through the teeth from the very beginning. But it ain't looking good. So this is all by way of the long way of saying the following, ladies and gentlemen. We're going to wait for the report. We're going to wait patiently until it comes out. We've got another 9 minutes before it comes out. Once we do that, we're going to flip to, all we have to do is see what this prints out. That's the end. We don't need this anymore. We'll come to this screen. This is a layout from MT4, the MT4 platform, and it's got our 6 trading currencies right in front of us. Aussie dollar, euro dollar, pound dollar, yen, dollar, Swiss dollar, CAD. Same layout for the same reasons. Right now they're all set to 5 minutes, and a couple of things on this front already. Maybe we'll go down to the 1 minute. Yeah, let's take a look at the 1 minute. I think it's going to be time. Although, yes, we need a 1 minute chart. What I want to point out is that we're now T-minus about 7-8 minutes in, T-minus 7-8 minutes. And what did I want to say? Oh, yes. right before the release of these reports, you're going to see a lot of nervous energy, up and down, jumping around. That's the rookies and the newcomers trying to outguess or second guess or be one step ahead, or as the British like to say, be too clever by half. And making the markets, ramble and jangle. They're all very, nervous, and anything will set them off. In other words, somebody buys it, and everybody else has to buy because they think it's Citibank and it's some yodel in Iceland or something. But we will wait to see if a sustainable pattern develops. And oh yes, and another thing I need to warn you about. I warned you about the risk. There's also another risk, not only of losing money. There's a risk that the trade that you wanted to enter, which would have made money had it been filled, doesn't get filled. And this is a problem globally, especially, particularly in these kinds of events where volume is intense. The markets are what we call fast. The price may move over your order, your market order, because it's so fast it didn't get filled, and it can be a little risky. It can be a lot risky, particularly in the case of misexecution. It's hard enough to make money without tying your shoes together before you get off your horse. So be aware of that too. So, in other words, we may go to the trading platform and push buy, sell, buy, sell, and you'll see that some of them won't get filled. Some of them are jammed up. We may only get filled on a partial amount of our orders, and so that's also part of the game as well. And my guess is that today such will be the case because of the tremendous. This is the historical, just the plain historical, nature of this report. 22 million in 1 month is unprecedented. 1 month, it's just unprecedented. So it's a historical making day for nothing else, but I think that the distinct possibility exists to make a few dollars on this. If we, there's a lot out of our control. If it gets jammed up, if massive orders hit our servers, hit the markets, we may be squeezed out. It won't be the first time. You miss a good train, but it happens. But on the other hand, we have been very liquid, thank goodness. All the markets worldwide, it's just not a financial crisis. It doesn't contain that gut-wrenching, horrible, liquidity trap that we were in 2007, 2008. No, this is different. Bad, but not the same. At least we're liquid. Markets are transacting, and prices are real, and for those with enough nerve and a little cash, these markets are fantastic, but you have to keep your head screwed on very, very tightly. All right. Any questions, ladies and gentlemen? We have T-minus 4 minutes and counting here. Any questions? Okay. Good. Okay. T-minus 4 minutes and counting. We're expecting 22 million. In the event that it's anywhere less, let's call it 21 million, 20 million, that's going to be considered positive. It'll print out in green. That means that we should, by way of recap, see the dollar on the right go down and the dollars on the left go up. That's the theory. You'll notice that it's taking the opposite turn now, but that is completely and totally irrelevant. Those are just the the weak hands, the loose hands, the inexperienced, the traders trying to figure out and trying to be ahead of the game. Most of those are going to lose. We don't follow them. And then we will go to the platform and execute our position. So again, dollar strong, sell, buy, and vice versa. Okay, but you got to be aware when you see that you get an error message, a can't fill, a non-fill order, come back later, whatever, something that says different things. Move on, just move on. Try to get as many fills in the direction. But this is only going to occur once it becomes somewhat evident or likely that the trend will maintain long enough to get in and get out and make a few dollars. You can't get in and get out. It's not that kind of game. So with T minus 2 minutes and counting, historical. What is the report that gets released before NFP, and is it important to learn that too? Yes, Lesha, that's called the ADP report. It comes out on the Wednesday before the NFP. But the ADP, that's automatic data processing. They're a big Texas outfit that processes, I don't know, something about 44 million payroll checks a week. And so you think they're pretty well situated to know the story about, more or less payroll checks. But compared to the data set that the U.S. Department of Labor uses in gathering their data for the NFP, they sample most of the entire U.S. economy, and their data set is well over 100 million. So the short answer, the answer to your question is it doesn't matter in the least. They're completely uncorrelated. Okay, with T minus 1 minute, my pleasure. Lesha, you're a man or a woman, if you don't mind me asking? Lady. My pleasure, ma'am. All right, with T minus 1 minute and counting, and okay, so we're ready to go. The key here, in my opinion, is to avoid panicking. Wait till we see the pattern that can stick long enough to buy into. A quick pop and then a quick pop the other way that we miss or can't get our handle on. It's not worth the effort, and the risk is too high of just getting wiped out because you're not. We're looking for something that'll sustain a little bit that we can watch go up and then get out of, watch go down and then get out. Okay, with T minus probably under a minute and counting. We're going to go right from here to that NFP window on the MT4 to get a look at our 6-trader, 6-pair window. And then we'll go from there. When we see something discernible, we'll go back and forth to the trading platform and execute there. Okay, it should pop any minute now. Any second now. Oh, it's always so exciting. I've been doing this for decades already, and I still get a big kick out of it all the time. It's a lot of fun. But this time, there's too much goddamn risk with this. I have to tell you, it's a little frightening even for me. I've never seen numbers like this in my memory. I don't think anybody. Oh, here it is. What the hell? What the hell? I printed out in an error. I'll do refresh. How fucked up is that? 0K. The hell is 0K? We'll go over to Forex calendar. Wow. Never seen that before. What is 0K? Non-farm payroll. They're not printing out either. Okay, 20 minus 20 million. All right, that's going to be good. That should be positive for the dollar. Yes, it looks like the dollar is dropping and these are going up. Okay, this looks good. Okay. Buy dollar yen, buy dollar Swiss, buy dollar yen and dollar Swiss. That's what we're doing. Buying dollar yen and dollar Swiss. Okay, we can do this. Dollar yen, buy. What the hell is this? Okay, buy dollar yen. Okay, great. Buy dollar Swiss. Great. All right, let's see what else is going on. Euro dollar, sell euro dollar. Yeah, sell euro dollar. Okay. Sell euro dollar. Okay, great. Okay. Okay, so far those are all doing okay. Euro dollars gave back a little bit. No, it's coming back. It's coming back. It's more mileage on this. Okay. Let's take a look at those positions. All right, they're in the money, but not by much. Okay, so what do you want from me? Oh, it's my pleasure, Mandeep. It's my pleasure to share whatever I can in these sessions. I hope it helps you. Okay, those trades are still working out nicely. Okay, I'm gonna hold on to them. So we've got euro dollar, Aussie dollar, dollar yen, dollar Swiss. All right, that's good. That's enough for a while. Although they're all going, except the dollar CAD, which is, yeah, it's getting along, I guess, but not like the others. All right, this is a good trend. All right, this is just Jim Dandy. Jim Dandy. Oh, all right, all making a nice profit here. Okay, great. So far, so good. So far, so good. Okay. Okay, these are doing just fine. So again, and let me make a small commentary here. It didn't take much, all right, just to go back. Now let's take a look at the actual number. Why it didn't print out was very weird. Now it prints out. It's minus 20. So in other words, notice it printed in green. 1.5 million less people got thrown out of work than they expected. Only 20 million, 20.5 million. That's considered good news. And I'm willing to bet, this is our currency positions are still doing very nicely. If we look at the indices, we're going to see them going up nicely, is going to be my guess. The NASDAQ, let's take maybe, I don't know if it'll have an effect. Let's take a look at the 15-minute. Ooh, pretty back and forth. Shook it up. A lot of volume, but the price didn't go anywhere. Huh. Interesting. I might be wrong about this, but let's take a look. That was the NASDAQ, didn't do much. What about the Dow? The S&P, same thing. Dow, okay, didn't have much of an effect at all on the stock markets. Okay, those trades are still holding on. Questions, ladies and gentlemen? I think I might be time to get out of the euro dollar. I think I'm going to close the euro dollar trade. Is the euro dollar get out? Yeah, there's a tiny loss there. Oh, the losses, they've all gone bad. Huh, it's all I guess it turned into nothing before my eyes. Wow, that money went quickly. Look at that. Oh, I got late fills on them. I thought I got filled, say, around here. I didn't. All right, let's not sell them out just yet. That just could be a one-bar reaction. The force index is still deeply negative on all of these, pointing down sharply. Oh, actually, these we want to go up. Ah, this is where the losses came, of course. Okay, let's see. Maybe we don't want to hang into these too long. I don't want to build up any big losses here. Give it a little more rope. Questions, ladies and gentlemen? Well, if there are no questions, excuse me, let me just say, first of all, it was a pleasure to have you here in the room today. I hope you took something away, beside a little profit. A little profit's always nice. I, as you can see, simply blinked mine away. I didn't even see it came and went. But the key is that we learned something and didn't lose any money. I think any moment now, if it keeps going up, I'll liquidate them all. But I just want to point out one last thing before we depart ways, and that is the following. Markets are manic. Now that we use the word bipolar, what it means, either what manic means is extreme. Bipolar means extreme. It's got, they're not in the middle people. They're people who behave at the extremes. The markets are behaving at the extremes. The slightest announcement, Georgia lets people off the leash. Portugal lets a few people off the leash. A state in Germany decides to open up the restaurants, and everybody says, "Oh, it must be over. Must be. Let's get back to work." The president of lots of countries is out saying, "No, we really are prepared to sacrifice a certain number of workers to get the economy rolling again. We've got to get rolling again. That's way more important than endangering anybody's lives." This is in essence of what we're hearing. And you can get away with that stuff in People's Party, the Communist people, the Chinese Communist Party can get away with it, but you can't get away with that in in Spain and Italy. It doesn't wash. So what I'm trying to say is, while I'm taking a look at the markets, didn't really reveal any. There was a brief up and down, but the net move was zero. My point is that there's a lot more to go down, a lot more. This, by the way, will be considered, wow, it's great, well, way better than we thought. It's going to end, it'll be a V-shape. You hear this V-shape recovery nonsense a lot, V-shape. It's going to be V-shape anything. This is going to be something that lasts a year or three. Just look back at 1918. This is serious business. It's not going to go away. We're not going to be, going to have to hunker down. It's bad news, really bad news. So, well, I just leave it at that. And I think it can be seen that the fact that the dollar is continuing to strengthen all across the board means that 20 million, 22 million people understand that if you want to make any money out of this in the stock markets, in the bond markets, because they're not going to go. Chairman Powell has said explicitly there's not going to be any negative interest rates from Uncle Sam. There's not going to be any negative interest rate dealing window at the Fed in New York. Forget that stuff. The ECB may think they understand it. The Japanese surely know it better than anybody else, but few people really see the virtue of it at all. And it doesn't seem to have any discernible effect other than confusing people who really ought to understand such things. But that's it. So these trades are still good. They're still making money. We're still the dollar's gaining strength across the board. With that, ladies and gentlemen, I'm going to bring the session to a close. I want to thank you for your attendance. We are always humbled and grateful to all of our customers for their patronage and their choice of us here at Alvexo as your online dealer for stock CFDs and index CFDs and commodity futures and foreign exchange. We try our best to to give you the services and support you need, and are always, gladdened and humbled by your patronage. So, ladies and gentlemen, with that, we wish you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. If the dollar is the key currency, why doesn't gold and Bitcoin dollar get affected? Because Mandeep, are you still here, Mandeep? Um, oh, because the trade isn't in dollar Bitcoin. In other words, you're saying, well, if the dollar gets stronger, why doesn't drive dollar Bitcoin go down? Because they're Why doesn't it go down? Well, it should go down. It will eventually go down, yes, assuming that people aren't buying the Bitcoin as well. In other words, if remember dollar yen, there's no alternatives. You're buying dollar with yen or yen with dollar, you can't do it otherwise. But if people are buying Bitcoin with euro, Bitcoin with sterling, and strengthening Bitcoin against sterling and euro, any independent or discrete move, as we say in statistics, between the dollar and the Bitcoin would effectively be canceled out or made to be invisible, because the Bitcoin itself is rising in value relative to the other currencies. Did I confuse you utterly, or did I make any sense? Oh yes, always yes. There are alternative purchase options. You could buy. I think we used to traffic in alternative ones, but they're very, very risky. They're extremely illiquid. The cost to us of providing them to our customers was so high that it made them basically prohibitive. Nobody traded them. So no, but yeah, there are ways to do it. I don't really know how, but no, the Bitcoin is definitely not tied to one currency. Exactly, that's for sure. That's for sure. And we do quote, on Euro Bitcoin, Bitcoin Sterling, Bitcoin Ruble. There's exchanges that'll quote you anything in Bitcoin. Well, thank you, Mandeep. Thank you for the questions, and it's really it was a lively group. Have a good weekend yourself, sir, and thank you to all of you for joining. And hope to see you next time. Trade with confidence. Bye bye.